Hello everyone, how's it going? This is Eddie. Just going to do a quick weekend update on the markets. So next week it's Fed meeting, FOMC on Wednesday. So expect some volatility, right? First thing we're going to take a look at is the NASDAQ, because the NASDAQ actually closed in bear market territory on Friday, right? Bear market is 20% correction from the highs. So to show you how to measure that on TradingView, you can use this ruler, measure the high, bring it down to the lows, the close right here. You can see it was closed at under 20% on Friday. Right, we actually went below that just a few days ago, last week, and we actually were down about 22%. Right now we're about 20%. So for next week, we really want to see this area to hold. If we don't hold this area and we actually enter in bear territory, usually that drags down the S&P 500 as well. The S&P 500 is actually pretty well off compared to the NASDAQ, because I think we're only down about 15% on the S&P 500, so we're still in correction territory. So I am looking for this to bounce, hopefully after the FOMC meeting. If the meeting goes well and if the Fed is dovish, we should get a nice rally up and break out of this downwards channel. If we don't, if we break down, then if we break the low, this is the area that we really want to look at. It's the low right here and the absolute low right here on February the 24th. If we break these lows, you really want to hedge or go short because we won't get the next leg down. All right. And if we do go down, there's quite a bit of room to go down too, right? So first stop is right here at these lows right here. And then we could actually come down to this 260 area. Right. So if that is the case, we're going to measure the move. Right. So from the highs, if we fall down to this first area right here is about 27% drawdown. And then we fall all the way down to right here. This is a typical bear market correction is about 37%. Right. So if we do hit down this area, well, this is the area we want to see some support, and then bounce back up if we do hit this area. But hopefully we can hold up here, right? If we can hold up here and then rally up and break out this channel, be awesome. And then we can finally break out this downturn. So right here, you can see we're at this downtrend. So we want to see either break the high of this or break the low of this. This will give us direction, right? Right now, we're just consolidating into the Fed meeting. So see what happens, right? If we go over here, we break above here, we're most likely testing this area, and then the 50 and 200 up here that we're going to test right afterwards, right? So if there was a dovish Fed meeting, most likely we're going to rally because there's a lot of people shorting right now, and a lot of people are bearish, and the sentiment is bad. Usually that's a bullish indicator, right? Because all the bears are already bearish. So the only thing left are the bulls, right? And the people on the sideline. So if we do break above this level right here, I think a lot of the shorts going to get squeezed, and then we're going to get that pop rally into to test these resistance areas again, right? And if you look at the RSI and the MACD, we are having a bullish divergence. As you can see, the bullish divergence, we're making higher lows right here as the market's making lower lows. So that's a bullish divergence. Usually that indicates either consolidation phase or change in momentum, right? Usually timing a bottom. So hopefully that's what it is. If not, then we'll be prepared if it does go down lower. Take a look at the SPX. So this is the SPX, measure the high from here to Friday's close. That's about almost 13% drawdown from the highs. We went as low as on February 24th, about almost 15%, right? So we're a little bit better off over here. And I think it's because the energy and the commodity sector is holding the market up, right? So what we are looking for on the SPX are these lows right here. This one and this one are the lows that we're looking to hold. And if we break above right here, we want to test this area back here, right? So we break above here. First, we want to try to break above this 21. So if we do break above here, I'm pretty sure we can break above 21, retest this high right here, this high of the consolidation box right here. And then hopefully we can go and test the 50 and 200. Usually the first try on the 50, 200, it will fail. So if we do rally up and rally into this area, I would take some profits and then wait for the consolidation or the retest before going back in longer if you want to trade it, right? So go bullish if you break above the highs right here, go bearish if we break the lows right here. So that's how we trade short term. And there's really not much to swing trade unless you really want to trade some of the strong sectors right now. The strong sectors would be like materials, some commodities, and some oil stocks. Those sectors are doing really, really well. And if you haven't been in it already, you missed the boat on it already. So we're at the tail end of it. It's overextended, so we're looking for a pullback, and if it does pull back, then we most likely will buy some, right? So I did take the trade on XLE, which is the ETF for oil, and we did really well with it with the leap options. I think I made about 300% on most of it, and then the rest I some I let it ride a little bit longer, so it's been doing really well. All right. So with a market condition like this, there's really not much to do. If you are in a long-term holding position, if you're a long-term investor, you really want to hedge on the way down, right? Because if we do break down, there's still a lot of room to go down too. So you want to hedge this room from here to here. You want to hedge that if we break this area, right? If you're trading, if you have some bags that you're holding and looks like they won't come back, cut them, because if you don't cut them, they can actually go lower, right? Cheap stocks tend to get cheaper, right? And if you're holding those high growth names with no earnings, some of them don't come back. They'll take years before they go back to the highs, right? So if you are going to invest in some of those names, make sure you pick names that are profitable and sustainable longer term, right? The most money is being made right now in day trading because the swings are so wide. I actually started day trading in November when I got stopped out with everything. So I was down about 30% in November. And now I'm up almost 500%, right? Because I've been day trading every single day. And these ranges, you make more in one day than you do in weeks of swing trading with this type of volatility. So that's where the money is made. And a lot of the students that took my day trading course is doing fairly well with it. That's where the money is. So you have to be very versatile on your strategies. So when swing trading don't work, then you can do some day trading, because if day trading is working and if the range is wide, you can make a lot of money, right? I'm not much of a bearish trader, but if you're a bearish trader, this is a good environment to trade bearish as well, right? Because everything's trending down right now. Although right now is not a good area to enter for bearish, because we're getting close to a bottom. But if we do break this level, you can actually make a short-term trade on the bear side, right? Because if we break this level right here, most likely we will end up being down here. So you could take that trade if you wanted to. But the best position to be in is cash, right? Because once this thing finds the bottom, we're going to rally up and we're going to rally hard, right? So usually after a big correction or a bear market, the market tends to bottom and then we go rally on the other side very quickly. So and make back at least 50% of the drawdown, right? We make about 50% back if we do rally off the bottom. So pay attention to what's going to happen after the Fed meeting. That will give us a more clear direction, and then we can trade based off that. Yeah. And before we look into a little bit more charts, please subscribe to the channel and like the video. It'll help with the algorithms, and then I can post more videos going forward, right? Now, if the market continues to be very choppy after the Fed meeting, it's important to see where the range will break into, right? So if we are going to break these ranges, right? I think this will give us a very clear direction on where it's going to go after we get this range break, because this channel is pretty defined, right? If you look at this, we're making the lower highs, lower lows, so that's still a downtrend. What we're looking for right now is, right now we have a higher low right here. We need to make a higher high to confirm this is the bottom of the temporary downtrend, and then we're switching to an uptrend. So if we are going to break above this level, we want to see break above the high right here and maybe test the 250. We do that, you'll form like a higher high. So if we make a higher high, we're going to pull back, make a higher low to retest this channel, and then we break out. So that's the case I want to see, but we'll see what happens. If that doesn't happen, most likely we break this, we go test here, rally back up, retest this area, and then come down lower. So, there's two different scenarios here. There is technical analysis. Everything's based on news right now. So it's highly dependent on what the Fed's going to do, and highly dependent what the Russian war is going to affect on the markets as well. So stick around for some more volatility, right? Don't rush into this market. Once we find a bottom, there's going to be a lot of trades. So right now, you just take your time, look for good setups, and then once we find that bottom, then we're going to have that watch list to enter the stocks we want to own for the longer term, right? Right. And we're going to take a look at the IWM as well. So IWM is small caps. You see right here, we've been consolidating sideways for about a year, and then we finally broke down. As you see, we broke down, retest, came back down, test this bottom, and now we're in the middle of that range again, right? So seems type of scenario. We need to hold this bottom right here. If we hold this, then we can break out of this channel, right? If we break out of this channel, we're going to test this area again, and hopefully we break back into the box. If we can break back into the box, then that is a good sign that we could get a reversal and go higher, right? If we don't and we break down, most likely we want to test the bottom of this channel, right? Test the bottom channel right here, and potentially even go lower, right? So we're giving back almost, I think about 50% of the gains from the rally from here, right? Yeah, so about 0.618, right? 61.8% of this range right here. So usually that's an area to hold. So if he actually does hold and changes direction on the bull side, then we could pick up some momentum and try to test the highs again. Okay, so XLE, we take a quick look at SLE. So this is SLE. I've been telling people to buy oil back here. So I bought some leaps on SLE, and I bought some shares of CVE and some Canadian oil stocks like MEG and CPG. I did took an early exit when we get that rally right there, and then I did catch some of this move as well. But I did exit a little bit early. I missed majority of this move right here, which is the best move, but I was playing some the busy day trading, so I did miss a lot of this. I caught maybe a little bit of it, and I think I caught it around right here, this area right here, and then we did take an exit last week as well. So I did went back in a little bit with I think it was Devon or CVE. Near the consolidation top right here. So right here, I am looking to see if we're going to break back up for continuation, or we're going to actually come back down. If we do come back down, I wanted to see it hold the 21-day moving average. If it holds the 21-day moving average, that's where I'm going to enter for the next leg up. Because if oil actually stays above $70, oil companies going to continue to go up because they kind of print money above $60. So we're trading above 100 right now. So they're really printing money, right? So there's a lot of legs up there. The only thing I don't like is the increase in volume up the top. Usually when there's a big increase in volume on the top, that signals that the trend might be over soon because a lot of people are actually taking profits. Right. So some stocks people have been asking me about, Tesla. Tesla's in a downtrend, it's below the 8, below the 21. It's a clear downtrend. So there's really no buys right now. What you want to see is to have it break above this level right here and then break above this level right here. So break above this 860 and then this 890. So let's just call it 900. So we can break above this consolidation phase. I'll call this, I'll draw this box out for you. So if we can clear this box, right? If we can clear this box on the upside, most likely we want to break out this downtrend and go higher. If we just break the high right here, we're going to go here, and then we break the high right here, we go here. So these are resistance areas on the way up. So if there's a lot of them, a lot of resistance right here, right? It's going to have a really hard time trying to break above. But if they do, they tend to do it very quickly. So, you know, you want to first see it to hold this low right here and the low of the February 24th. If this low holds, then it might just consolidate and then the moving averages get stacked and then we break out, right? So don't expect it to go really high anytime soon because we won't. It's just going to consolidate or trade in this range for a little while, unless it breaks down. If it breaks down, then, you know, if you're holding it, you really want to hedge it. If you're not holding it, don't buy it just yet. If you do, sell some puts around the areas down here, down like 550, 600. Sell some puts and hold it longer term, then that might be fine to do because well, I wouldn't call this cheap, but we did have a pretty significant pullback from the highs. Let's see, measure the down move right here. So it is down about 36% from the highs already. If we do come back down to say this $700 range or even $600, about 50%. If we can pull back 50% of this from the highs, that's a really good buy, right? And especially you're bullish longer term. So I would sell some puts around this area right here, around this between $600 and $500, right? I would sell some puts, collect the premiums. If you get assigned shares down here, is perfectly fine. There's a lot of support around this area right here, which is around that, say, 500, 550 area. There's a lot of support right here. So if it does pull back to this area, that's a fairly good buy for longer term. NVDA. So NVDA, where the chart looks slightly better. We're actually in the wedge. This is the falling wedge, which is a bullish pattern. So you see the range is getting tighter and tighter. So once it gets tighter and tighter, it's easier to trade, meaning if we break down, you go short. If you break up, you go long, right? You see how the trend line matches with the 50-day moving average. So if we do break out, we need to break above the 50. So if we break out the 50, we're most likely going to test this high right here, and then it might do a little pullback to retest and then go higher. If not, it can go straight up to around this area right here. And NVIDIA is type of stock that can go up really quickly. So, you know, you want to pay attention to it. You might want to set an alert around up here to see if it'll break. I'm gonna set my alert right now. So I'm gonna set an alert on this horizontal bar right here. If it breaks above it, it's going to tell me, and then I might do a small swing trade with there with some options. If you want to hold this long term, I would wait for a pullback to see if this area actually hold, this bottom right here, right? See if this area actually hold. If it holds, that's the time to buy. If it does not hold, it's going to break down and it's going to come down much lower, right? So there is quite a bit of room to come down to. Majority of the buyers or in support is actually in this consolidation area right here around this 130 and 130 and say 145. Right, so this is area of strong support. So if it actually comes down to this area, this is where I'm going to buy. But as far as this concern, it's just going to trade in this range till it breaks in one direction or the other. So play the break, right? If it breaks down, go short. If it breaks up, go long. It's a very simple trade right here. Google, they actually announced a stock split and it went down. That rarely happens, and you know, that just tells you what type of market we're in right now, right? Usually when these big companies announce a stock split, they tend to go up, but this went back down. So it filled the gap and we tested this support and we tested this support about 3 times now. You really want to see this support hold. If we actually break down this support, there's a long way down, right? There's the next support level is actually right here at 2100. You really don't want to go down that far. If it goes down that far, that means it's going to bring down the S&P 500 as well. And if it brings down the S&P 500, I think that's around that 20% territory. So over here, so if that's the case, then you'll see on Google as well. If Google drops down here, most likely it'll pull the S&P 500 because these companies tend to hold a lot of weight on the index. Same with Amazon. So Amazon announced a stock split. We did gap up. There's a gap right here. You want to see it hold this gap area. If we don't hold, we're going to fill the gap and then we're going to test the lows right here. So there is a short-term trade here if you want to trade it. So you just want to set an alert right here. If it breaks below this, say 28.75, it breaks below 28.75, most likely it's going to fill this gap at 2800 or so. So, you know, there's a trade over here. You want to trade it. If you do want to trade, just buy a put option, like a weekly put option once that break. And that will be a very quick trade. You'll be in and out in probably a day or two. So other than that, you want to see if it will break above this resistance right here, which is also the 50-day moving average. So if it breaks above right here, we're going to test the 200 up here, right? And that's pretty much it for this update. I'll see you guys next time. Talk to you later.